Hi, this is Suresh Vijan. Welcome to my channel Trade to Gain. Today we are going to learn how to adjust a ratio spread option strategy with the help of a real example. First, a brief description about the ratio spread strategy. The ratio spread strategy is a neutral strategy in options trading that involves buying a number of put or call options and selling more number of put or call options of the same underlying stock and expiration date at a different strike price. Example of ratio of buy and sell can be either 1:2 or 1:3, so on. This video is a continuation of our previous video published on April 2021. Combination of a put butterfly with put ratio spread in Bank Nifty. For better understanding, you can watch this video. Links is available in the description section. On 22nd March 2021, we created a put butterfly by buying one lot of Bank Nifty 34,000 put option, selling two lots of 33,000 put option, buying one lot of 32,000 put option. This is a net debit strategy with debit of rupees 2,479. Risk reward is 1:9. The only drawback of this strategy is the probability of profit is very less, that is 28%. To increase the probability of our original put butterfly strategy, we add a ratio spread of Bank Nifty by adding one lot of 32,000 put option and selling two lots of 31,500 put options. By adding the ratio spread, we increase our probability from 28% to 82%. Second, we shift our break-even point to 30,782, which is 3,000 points from our spot. And by creating this ratio spread, our net debit strategy is now net credit strategy by 5,455 rupees, and our upside risk is 0. For better explanation, check the current position on a Google sheet. You see from the Google sheet, trade is ratio spread in Bank Nifty. Our base trade is put butterfly of Bank Nifty. Date is 22nd March 2021. Expiry date is 29th April 2021. We created a put butterfly of Bank Nifty. Date 22nd March 2021 around 3:20 p.m. with buy one lot of 34,000 put option, sell two lots of 33,000 put option, buy one lot of 32,000 put option. This is a net debit trade of 99.15 or rupees 2,478. With this, to increase the probability of the base trade, we added a put ratio of 2:1 by adding one lot of 32,000 put option and selling two lots of 31,500 put option. With this, our net credit is now 218.2 or rupees 5,455. Our probability has increased from 28% to 82%. This we have shown in our previous video how we were able to get out of this trade with a decent profit of 5,000 rupees. Now we got many messages from our subscribers, sir, if this we don't exit at that and market is not in our favor and reverses and it touches our break even point, how do we adjust? For better explanation, now we are showing how do you adjust our put ratio spread by if we don't exit and the market is not in our favor and market touches our break even point. So on 1st April, end of the day, Bank Nifty was traded around 33,858 and our trade is still in the profit of 4,741. We didn't exit the trade. What happens next? We just check. On 5th April 2021, Bank Nifty was trading around 32,678. We checked the trade is in loss of 1,637. Similarly, on 6th April, Bank Nifty 32,501, our trade is loss of 1,696. We check on 9th April 32,448, our trade is minor profit of 1,972. On 12th April 2021, around 11 am, Bank Nifty was trading around 30,800, which is our break-even point. We check the trade. Our trade is now in the loss of rupees 13,145. This loss is mainly because of our one short put which is unhedged. Our 449 short put has now become in the money at rupees 1287. A simple adjustment we can do here even without using extra margin. What we have to do is check the option chain where we can find or match the premium in next expiry. So we check the option chain in next expiry, that is 27 May 2021. We find 30,500 put option is trading at around 1310. So the adjustment here will be on 12th April 2021. Bank Nifty was trading around 30,800, which is our break-even point. We buy our short put 31,500 put option at rupees 1287. With this, our net debit is now minus 1068.8, and simultaneously on 12th April 2021 we go to next expiry 27 May 2021 and sell another one new lot of 30,500 put option at 1310. With this adjustment, without using any extra margin, our now net credit is 241.20. Our original credit was 218.20. Now we have increased the credit to 241.20 or rupees 6030. With this adjustment, on 12th April we check Nifty at end of day was 30,792. We check the trade. A trade is still in the loss of rupees 16,601. On 13th April, Nifty recovered, Bank Nifty recovered and was closed around 31,771. We checked the trade. Our loss has now reduced from 16,601 to 4,746. 15th April 2021, our losses further reduced from 44,746 to 2645. Similarly, on 16th April, we checked the trade. 19th April, we checked the trade. 20th April is minus 11,172. 22nd April is minus 6,000. 23rd April is minus 5,700. 26th April, Bank Nifty was trading around 32,275. Our trade was in minor profit of 986. On 27th April 2021, Bank Nifty was trading around 32,720. At around 3:20 p.m., we checked the trade. Our trade is a profit of 6,580. Why this profit? Because our sold put option on 12th April at the rate rupees 1,310 has now traded at around 480. With this small adjustment from loss of 13,145 and further loss, we could manage our trade without using extra margin and close the trade with a decent profit of 6,580. Simple adjustment of going to the next expiry 27 May 2021, we were able to convert our loss position of 13,145 to a decent profit of 6,580. Disclaimer: this video is only for educational purpose, not for any type of call or recommendation. Please do your own research before taking any position. Happy learning. Hope you liked the video. Please like, share and comment on the video. Don't forget to subscribe and click the bell icon. Thank you.